If this is truly the third leg up, in Elliott parlance, it's a five wave situation, one leg up, one leg down, one leg up, one leg down, and the last leg up. And I'm not a big Elliott guy. I know the basic theory, but if that's true, and I believe it is, because that's how most markets function from a long-term perspective, then this is the largest leg in price appreciation, but not so long in duration. So, for example, you could see maybe a 3 or 4 year move, but it's twice as good as the last leg up, which in silver was from like 9 up to 50.
50, yeah.
So if it's twice as good as that, you can imagine what the possibilities are. So is it too late? No, it's not.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. You always ask us for this guest to come back on, and he's here. David Morgan, also known as the Silver Guru, is back here with us again on Reluctant Preppers. David, thank you for joining us here again on Reluctant Preppers.
Hey, it's good to be back with you.
We always enjoy your visits here. It was a special treat to us to see you again in person at the Red Pill Expo in Hartford, Connecticut earlier this summer. And when we were there, we talked about a lot of topics, including precious metals. And there certainly has been a lot of activity since then with further breakouts in both the gold and silver markets. If you could first check in with us on that. And one of the big questions a lot of people are asking, because there were so many false starts in both gold and silver over the past half decade or more, that they're asking, the question that's on a lot of people's mind is this for real? Or is this just another flash in the pan that's going to get beaten down right away? So could you talk to us about, is this really the start of something?
Sure, I can. First of all, in the commodities market, and even though gold is money and silver is money, at least most of us, a lot of us believe that. If you're looking at soybeans or corn or any market, if there's a high resistance level, usually to get through that level, you have to attempt it like 3 times. And on the fourth time, you go through that level. That's a rule of thumb. And that rule of thumb works pretty good. That's why they call them rules of thumb. So gold had been blocked in US dollar terms at the 1350 level. You could call it 60. I said 50. That's how it looked on the chart to me. It's not an exact science, but it hit there about 3, and I think the fourth time it went through. You also look for, so that's one indicator that it's real. Second indicator is how much volume is involved. Did it do it on a very weak volume? If it does it on a weak volume, then the chances of it staying above the resistance level are poor. If it's on big volume, chances are, especially really big volume, that it will stay above that level. And then after that's accomplished, what you look for is how many days duration does it stay above that level, and what does it look like beyond that level? Well, gold has performed magnificently beyond that level, going up probably almost $200 or so. Volume has been above average almost every day. Even the downside moves are very short in duration. It comes right back up. Commitment of traders wise, it looks horrible, but markets could stay overbought for a very long time. And so I'm convinced that this gold breakout's for real. Now, I like to see silver confirm gold's move, which means that it's got to do something similar at its particular level. And its levels around the 18. The charts are much messier for silver than gold, but I'd look at it at about 18, which we've just done recently. It's trading above that level, but we will get a correction at some point. No one knows exactly when. I just finished the Morgan report that we published over the weekend, and I've suggested for my readership, my paid members, that they look at some of the profits trading wise. I mean, what I teach, if you want to trade, that's fine. And I think you can or should, I don't know if should's the right word, could, because the volatility is so high in the sector. But what you never want to do is let go of your core position. I mean, you want to buy and hold for the whole duration as long as this market's still in a bull market, which I think will continue for a few more years. So you want to hold that core position, but you can trade around that position. And that's what I teach. That's what I do. And that's what I suggested to my clients is they probably could look at writing covered calls, which is a 85% win most of the time. In other words, you rent your stock for a month or 2 or 3 or 6. You collect a very large premium because the volatility is high, which is known as the Greek letter beta. And I'm not trying to impress you. I'm just talking to all levels, stock, brokers, traders, and just the general public. So a high beta stock will give you a higher premium, and they are. So there's that. So right now, yes, it's a real breakout. It's sustainable, yes. How much longer before a correction, I'm not sure, but I think we'll get a correction fairly soon. And the biggest, I think, question above all of that is when the correction occurs, what does it look like? Because that's really going to tell us a lot. If it drops gold all the way down the breakout point, then this market's not nearly as strong as I think it is. I doubt that highly, but the market knows more than me. If silver really gets crushed and it gets moved down to back in the 15s, let's say. I mean, so it really depends. And on the other hand, let's say gold moves down to, I don't know, pick a number, 1480, and that's as far down as it goes, and it pops right back up. Well, then the market's exceedingly strong. So we need to see, for clarity, what this looks like. And I don't think it's trading differently, and I think it'll continue to trade differently. I don't think you're going to see these long, grindy moves. We did that for 6 years. And for 6 years, we were in a trading range, and it's broken through that. So time will tell. I think I probably over-talked it, but that's the way I see it. And I've been pretty good on the breakouts and that kind of thing. I've been pretty poor, I admit, on the bottoms. I mean, especially silver. I mean, that market could surprise even me. I remember, and I forget how many years ago it was, but it hit a spike low, which is very, very typical of the silver market, to spike high and a spike low. Spike low at $18.17. I still remember the exact number, $18.17. I said, that's it. It's spike low. That's the bottom. And I was right for 14 months. So for over a year, I was correct until I was wrong. And I was wrong, because it went below that. We all know, we're watching ReluctantPreppers, Dunnigan saying, oh, that Morgan, he doesn't know anything. But I never claimed to have a crystal ball. But that shows you, I mean, for me, I laugh about it because it is a bit humorous, but I was right, and I was right. And I wasn't bragging. I hope I didn't sound that way. I was stating, that was the low. And it absolutely was for a long time until it broke that low. So I did call the exact low. It was about my fourth time calling a bottom, but I said December 2000. Gold's easier to analyze to me than silver by far. And I saw gold, I think it was around 1050, December 2015, and that is truly the low for both the metals. But and we've been up since then. So back to you.
Well, one of the questions that people have now as they look at it, and they're just waking up because people hadn't been paying attention for a long time, and now more and more people are. In fact, you can't help but notice even stories coming out in the mainstream financial press saying, oh, now mutual funds and other people should be looking at gold. Maybe we should all be looking at gold, that kind of thing. So that's been a long time since we've seen that. And so people are starting to ask the question, is it too late to get in now?
No, not in my view, my studied view. I mean, if this is truly the third leg up, in Elliott parlance, it's a 5-wave situation, one leg up, one leg down, one leg up, one leg down, and the last leg up. And I'm not a big Elliott guy. I know the basic theory, but if that's true, and I believe it is, because that's how most markets function from a long-term perspective, then this is the largest leg in price appreciation, but not so long in duration. So, for example, you could see maybe a 3 or 4 year move, but it's twice as good as the last leg up, which in silver was from like 9 up to 50.
50, yeah.
So if it's twice as good as that, you can imagine what the possibilities are. So is it too late? No, it's not.
Wow. Another question is for people who do want to participate, what is some strategy that they can consider for maximizing the opportunity going ahead?
But then again, I want to stay consistent. And I've always taught, and I'm not a coin dealer, to have the real metal first. I mean, that's the most important part of a precious metals investor is the real metal itself. Own it, touch it. You don't own it unless you can touch it. There are cases where you probably need to store it or store some, but we won't go down that path right now. So that's it. You start, and I think you should own both. I mean, yeah, I still think silver is going to outperform gold, but gold is you dash with your cash. There's lots of reasons to have both metals. So I would say have both of them. Beyond that, if you really want to get leverage in these markets, you have to be at the right place at the right time, which means sometimes gold performs just as well as a good mining equity or a gold index fund. Well, if that's the case, why take the risk of having mining shares? But there are other times where the mining shares really outperform the metals itself. And if you've already got a metals position and you time it correctly, and we're entering that period right now, then you want to have, I suggest you consider having some exposure to those because they can really go crazy. You got to remember, when Buffett bought silver, he bought silver. He didn't buy Pan American silver like his friend Bill Gates did, because the amount of money that Buffett put in the silver market would have taken even a major company to a new high. So it's a very small market.
We've got some additional questions submitted by viewers. If we could pitch some of these. You mentioned in passing a few minutes ago the Commitment of Traders report, and you've talked to us about it before. Bill Perry asks, I'd be interested in hearing explained in layman's term how the, quote, experts interpret the COT reports on PMs, the futures contracts, and how the prices are manipulated by spoofing. But do the reports really tell what direction prices will go with any percent of certainty?
Yeah, they predict the where the prices will go pretty accurately. Basically, you look at the OI, the open interest. So open interest just means how many contracts are open. So people are holding their contracts at a profit or a loss on paper only, and they haven't cashed them out for profit yet. So that's what's open. I think that's clear, right? Okay, so you look at the open interest, it gets to a certain level, and then it doesn't get any higher than that. Now, that's a bit of a misstatement, but generally speaking, if you go back to, I don't know, when did I start? 2000, probably 2003 in the silver market, you could almost trade to an exact number. It was that dialed in of a market. There wasn't any ETFs, so you could go and see what the open interest was. It got to a certain number, and that was almost always the top. And the reason it was the top is there's so much money that the trading funds have. And when they're out of money, they can't buy any more contracts. So when that number is hit, that's the top. Now that's going back to, almost 20 years. But even now, and the open interest is much larger in both the metals than it was back 20 years ago, which you would imagine. There's still sort of like a number that we know is pretty close to the game over kind of a thing. So that's clue number one. And what's most people don't understand is that you could be overbought or oversold for a long time. So just because the open interest is there at that level doesn't mean a turn is imminent, but I mean a turn is going to come sooner or later. And we're pretty much there in gold right now, but it's still overbought, technically overbought. I mean, it's going much higher, but that doesn't mean it's going higher based on the commitment of traders. It should come down here fairly soon. So that's how we look at it. Once it comes down, the open interest goes down along with it. So you go from 100x as the limit gold to 70x for the 30% closeout of contracts. And you see what the price movement is during that sell-off. The deal is, in layman's terms, as best as I can make it, is a poker analogy, if you'll allow me. So I'm I'm playing at high stakes poker, and I buy in, and I've got $2,500, and I'm so sure of myself, I keep betting and betting and betting, and the stakes get higher and higher, but I've got $2,500 on the table, but the guy sitting across from me is a banker, and he's got infinite chips. So once I'm out, he's all in. He's not all in, I am. So the only way I could cash out if I'm long silver or long gold is I've got to sell that profit on paper. It's an open contract until I close it. So I am open to selling because I have to take my profit. But the banker, he's been short all the way up. He's been selling me that paper the whole time. So when I sell, the banker knows I'm selling and he sells. So now we got two sells. We got me selling for a profit and him selling to short the market and push it down. And all contracts have to match. Every buyer has to have a seller. So now what happens? Tons of selling pressure and it starts to cascade. And how do they fill them? How do they match them? Well, they match them. They match them in gold. It's a more liquid market than silver. And this is an exaggeration for effect. He said to explain it in layman's terms, so I will. Let's say that gold goes to, well, we'll do silver. Silver goes to 1850 and the funds are out of money. So they've got to sell for a profit. They started buying at 1550. They got $3 profit on paper. They start to sell, the banks sell on top of them. So the next order, this is an exaggeration for effect. I want people to get the concept. So the next order is some guy over there that's a big silver bug. You know, he listens to Ted and me and Bill Holter and who knows else. And he says, man, I really missed it. I wish I had $18 silver. Or maybe he's real smart. He says, now 1785. That's my order. So he's got an open order in there at 1785. So everyone's selling at the same time. The funds for profit and the banks to push it down. But they got a match. The only match that's out there in the market, this again is an exaggeration, but gives you the idea, is 1785. So there's a gap in the chart. There's no one to take the buy from all these sell orders except that lucky guy that got his wish. He wanted to buy silver at 1785. Guess what? He gets to. And there's no fills between those two numbers, 1850 and 1785. Again, that's why you see a gap in the chart. That's what it means. That's what happens. So then there's other orders in and they come in and then, you know, a lot of unwinding, but I try to make it as simple as possible so people can understand it. And then once the game is over, the open interest goes, as I said, from 100 to 70 as an example. 30% of those contracts are closed out, winners and losers. And in the futures market, for every winner, there's a loser. For every dollar made, there's a dollar lost. That's why I like the equity market so well for my subscribers. I mean, everyone that follows in the KL at whatever it was, $5.99, made 10 times on their money. There weren't any losers if they did what we told them. But anyway, back to the futures market, game that most people should not play, but it does play into the price discovery mechanism. As convoluted as it is, that's what determines the price.
We've got a question. This one is a little different. It's from Test Guy, who says, how is it that Chinese gold pandas are available on the market, yet we always hear that China doesn't export any of its gold? Does the Chinese mint function outside of the law, or if so, how?
You know, I don't know all the details, but there is contract. First of all, it's legal. There are designated dealers in the panda world, just like there are designated dealers in the silver eagle and gold eagle arena. And they have a contract with that mint to be able to sell. So great question. I never actually thought of it in those terms before. He's right. They don't export their gold, but there's probably what you would call an exclusion or an exception clause that for the state's benefit, they can sell gold pandas. So great question. I don't have the exact answer. You can probably Google it and find out. But no, there's just a few dealers probably less dealers that can deal in pandas than there are that can deal in eagles. And there aren't that many that can deal in eagles, by the way. And that's the primary market. After that, it goes to the secondary market, like your Mike Maloney, goldsilver.com or Miles Franklin or Investment Rarities, or let's see, I don't want to leave anybody out. I don't know. Anyway, that's the idea. Those are primary dealers. And Mike might be one now. I'm not sure. But anyway, that's the idea.
Cletus Smith asks, how likely do you see the possibility of Western governments confiscating gold from their citizens?
Practically none. I can't rule it out entirely. First of all, they have to admit that gold's valuable. And Bernanke taught us it's just tradition. So if they confiscated it, how much good would it do them? I mean, in the 30s, it did a great deal because we're still basically on a gold-backed currency. Just the government wanted to control the gold and not take it away from the people, but it's still basically a gold-backed currency. It's not true now. So if they took it all, think about it. How much good would it do them if it's priced at 3,000 an ounce? Really not that much. They'd have to push it up to like 30,000 an ounce to be meaningful. I really don't worry too much about that, but other people do. Will the next monetary world global currency or next United States currency or SDR have gold in it or not? I don't know. I suspect it may, but we don't really know yet.
For those who are concerned about the potential of confiscation, do you see any reason that they should have more confidence that pre-1933 or other historical or collectible coins would be any different in terms of their status for as far as subject to potential confiscation?
Well, there's been some really deep thought articles on that. It really, if you read it carefully, it doesn't really exempt you, but I'm sure all those people that make that pitch to their clients will be screaming at me. But if it makes you feel better, go ahead. I really don't think so. But again, what's the advantage of those things is the reporting requirements. I mean, that's more important really of a reason to delve into that world than the confiscation argument, which you hear all the time.
We'll be, I think, digging more into that next week. We're going to talk to Lynette Zhang about some of the myths and realities around that. So
she's the one. I don't know if she'll agree with me on, if they're exempt or not. It doesn't really say they're exempt. I mean, you could actually read it to say, well, if it's minted by the U.S. Mint, it's a silver eagle and it's stamped as U.S. It's legal money. I mean, the problem with it is, if you want to call it a problem, is who wants to take a U.S. Mint $50 coin that cost you $1,500 and go spend it at Walmart for the face value? Nobody. But as far as legal tender, it is. You could spend those things for $50 all day long. Go ahead, So it'd be hard to say that they could confiscate legal tender. That's my argument.
Yeah, that's the strangest thing, isn't it? Yeah.
Yeah.
Or cause you capital gains on it. But anyway,
yeah.
Mr. Personality asks, is platinum a good buy around $900?
I think so. I traded some of my gold for platinum recently. I let my readers know. One or two of them asked me what my thoughts were. I didn't take my whole gold stash and exchange it for platinum, but platinum had been so weak for so long. And I think it was around the 850 level, maybe 840. And it was at my local dealer here in town. And I said, how much platinum you got? And he goes, let me look. And I said, yeah, I'll give you. So I traded, whopping big, almost a schoolboy investment. For some people, it won't sound that way, but, I've been around for a while. So I took 7 ounces of gold and I got 10 ounces of platinum for it.
Why, just if you want to follow on with any of your thoughts on why you particularly thought that was the right time to do that particular move.
Well, because I look at these charts and kind of gut instinct as well. I mean, normally platinum sells for a premium over gold and it's selling about half the price, and it'd been such a long, long time, and I was bored. So I said, how much platinum have you got?
The story you told us before about when the gold-silver ratio gets so far out of whack, you take your pickup truck full of silver, bring back a glove box full of gold. So you must have like a suitcase on the bench seat next to you for your platinum, because that's kind of in between the two in terms of its value density.
Something like that.
Hey, we've got another question from Eli, who says, for a person who has a lot of funds in the Roth IRA or a Roth 401k and single with no kids, they're hearing a lot of talk from people saying, pull your money out of those places, but they rarely give any examples of where to move it to. Again, before we answer this question, we're going to say we do not give financial advice on this channel, but they're looking for conceptual thought process. What are your thoughts on those comments? So the follow-up question is, the person is concerned that they'd be landed with enormous fees and penalties for early withdrawal.
Yeah, tough call. Well, if you're single like that, you could take more risk. I'm going to presume and maybe inaccurately make a presupposition that you could probably save something outside of the Roth. And if that's the case, I would save in precious metals up to the point where it matches about 10%, at least a minimum, of what's in the Roth. So talking purposes, let's say you got 50,000 in your Roth, get at least 5,000 in the metals, minimum. And I think that could be achievable. I would not recommend, as a education, this is educational purposes only, that you would do it by taking something out and paying a penalty and all that. There could come a time where maybe you wish you'd done that, but if things all go crazy, and I really don't see them going that crazy outside of markets getting very wild, but I don't see any real huge disruptions, like closing the stock market or the bond market failing or any of that kind of stuff. Markets will adjust, but that 10% will more than make up for any misallocations or readjustments in the stocks, real estate, bond markets. I'm sure of it.
Follow-on question by the same writer says, presently, in your opinion, what considerations should a person make about whether to put some funds into American silver eagles versus gold, and as far as also 10th ounce or quarter ounce and so on? What are the thoughts that people should weigh in that?
Yeah, well, it's personal preference, really, but going back on my own history, again, I think you should own them both. If you're a small investor, medium investor, you should start with the coins. I would start with constitutional silver, what's called junk silver in the trade. You can buy a bag or a half bag or a quarter bag of dimes or quarters or even 50-cent pieces. That's a great place to start. On the gold side, if you want to buy quarter ounce or 10th ounce or even half ounce gold, the premiums are pretty high, but you got a smaller coin, so the ability to use it in a transaction for something small price wise, like foodstuffs or gasoline or that type of thing, you'd have a better advantage by having a smaller denomination. I again own both. Small denominations are good, but you don't need to go overboard. I mean, like for me, I used to say a bag of silver, which is $1,000 face per family, is probably enough or more than enough. So that would suggest for a single person, quarterback, probably enough.
Follow-up question is, are there any other commodities other than platinum, which we already discussed, that you would say people should take a close look at this time?
Well, yes, I do. I mean, I write an energy report. I'm pretty bullish on the energy sector at large, not just the conventionals, oil, gas, coal, but the unconventional. I mean, you got your solar, you got your wind, you've got your geothermal, you've got hydrogen, you've got a lot of these things. A lot of them aren't really viable at this time, but I like the sector as far as what the alternatives possibilities are. And then there's these really far out, stretched out, which I don't discount too far, even though I'm an engineer, I still have an open mind, that there could be some non-conventional, storage system for like the energy metals that I've written about in the Morgan report. So there's opportunities, I think, surrounding the energy sector that are pretty wide open at this point in time. But you got to be careful. You got to be selective. You either need help or do your own due diligence. And believe me, if it's a cheap stock, it's cheap for a reason. And so if you're going to get in that sector, you probably want somebody that's a leader, that's on like the New York Stock Exchange or on the Toronto Stock Exchange, rather than something in what we call the dreadful pennies on the pink sheets. So.
And also, before we let you go, we like to ask guests when we can about any particular step that they have personally taken to increase their preparedness for the potentials of risk that might be lying ahead. Is there anything that you want to mention that people, you think, hey, I think this is something that people want to think about that they may not have taken action on up to this point?
Well, I think yes. At the risk of looking like too loony out here, there's I forget the name of it. And I'm not getting a kickback or sale on this, but there's a light pen that can sterilize water. I forget the name of it, and I picked one of those up recently. It was fairly expensive, but I really like the idea of the convenience of it. That you can throw it in your backpack or put it in your truck or car and have it with you. Maybe have two, have one at the house and maybe one for the road. And, I'm just not in the mood to, throw it through a bucket full of sand and then boil it twice and then do this and that. And I would just, you put it in this pen, and I forget, but depending on how bad the water is, it basically kills everything in there. And it might not look that pretty, but in an emergency, you could drink it. I like that.
Well, any other questions that you think we should have asked you that we forgot to ask you, or any other final thoughts for our viewers before we let you go, David?
Yeah, I think so. I'll re-emphasize one we did talk about, but that is, that is for real. And I think we've got a good 3-4 years left in this bull market. And a bull's function is to shake off as many people off its back as it can. So, if you're buying gold at $1,500 and it goes all the way to $2,500 and you take that $1,000 profit, do whatever you want, but if it's going to 5,000, you just want to take a little bit of a profit. And I guess a shameless plug to help you along those ways. Look, $20 doesn't make much of a difference in my life, but on the website, themorganreport.com, on the books tab, pull down to Second Chance. It gives a lot of reasons of how to profit and not do what we call a round trip, where you buy gold at 1,500, watch it go down to 1,050, watch it come back to 1,500 and sell, which a lot of people are doing right now, by the way.
We've been speaking with David Morgan, known as the Silver Guru and author of the Morgan Report, which you can find at morganreport.com. David, as always, thank you for joining us here on Reluctant Preppers.
Donegan, it's always a pleasure to be with you. Thank you for the questions.
With surprising new concerns expressed about Dunnigan's changing hairstyle, one viewer even commented that hair is dyed, fried, and laid to the side. But what you're not being told is Dunnigan's hair needs no dye thanks to the wonderful vitamin and mineral regimen that Melody recommends, and is not laid to the side to cover any bald spot either, since Dunnigan's full head of hair is exceptionally well attached. However, Dunnigan does use hair products only as a disaster prevention because he's at severe risk of catastrophic emergency situations. But although there may be some changes you don't like to hair, this is one kind of change you'll definitely want to have on hand if the situation gets hairy. Pure silver. And for a limited time, your first ounce of silver can be purchased at spot price with free shipping on orders over $99 by going to sdbullion.com/RP. And you'll be supporting Reluctant Preppers as well. It's within your grasp to get your hands on the perfect change for hairy situations at sdbullion.com/RP. P.S. Dunnigan was not harmed in the making of this video. Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.